Now, Nifty today opened gap up, and that was after a sharp correction that we had witnessed in the previous two sessions. But the question really is it just a dead cat sort of a bounce back, or can you expect the pullback to continue?
Good morning, Suyash. Well, if you look at the broader chart structure, the data points which are emerging in the last few trading sessions, they
I
are
think
not very optimistic. The list has slipped down below 50%. We started around 67% as the January series opened. Also, there are a lot of shorting bets which are pretty evident in the futures and option space. And, this is the bounce which we have seen since yesterday, which came from around 21,400 odd levels, is just a dead cat bounce. That's the theory, I believe. This support is there to hold, but for the short term. There's going to be volatility for the coming week. You have the expiry, you have the budget coming up, and these things will keep the market on a slippery footing. But overall, if you were to see from the chart perspective, I would wait for the market to settle about 21850, that is basis spot Nifty. That would give me the comfort that things are really stabilizing. Otherwise, around 700, 700, 750, you can see another round of selling pressure getting back into the markets again.
all right, and Nifty Bank has also seen a pullback this morning. The index is up somewhere around 0.8% as we speak. But for the whole week, it is still under tremendous pressure. In fact, it's down about 3.5%, one of its worst weekly performances in the last 1 year. What's your view there overall? The numbers of IndusInd Bank came out, and I think that will provide some comfort that as far as NIMs are concerned. And could that potentially lead to further upside?
Well, Bank Nifty today is the first day where we have seen some good gains in the opening trade, but really, the party for Bank Nifty was spoiled by HDFC Bank, as I understand. That was the Bank Nifty took the biggest dent after HDFC Bank reported its numbers, and there was some serious selling in that counter. As I see, Bank Nifty 47,000 is a positional resistance. If you are a short-term trader, yes, we are trading right now around the level of 46,300, 350 where we are. We are not out of the woods again, I may say, for Bank Nifty too. Things would be choppy because State Bank will come to support. PSU Bank still have that strength. Bank of Baroda, Canara Bank. You have Axis and ICICI from the private banking space, which are giving support. IndusInd Bank, which you mentioned, results are good, but the reaction to the results have been a bit tepid, a bit slow, not able to sustain about the 1600 odd mark. IndusInd Bank. So yes, volatility would be the essence. Still not the right price point to go aggressively long on Bank Nifty. There is scope for slipping back to 45,500 from where the bounce back came. So I would not be very much comfortable taking an aggressive buying bet in Bank Nifty. I would wait for the resistance of 47,000 to break or stabilize. That's still far away to go for any meaningful recovery in the banking index.
All right, and talking about IndusInd Bank, interestingly, the bank, despite a healthy set of numbers for the December quarter, slipped about 2% in the morning trade. In fact, at one point, I was looking at the chart, it was the only stock in the Nifty 50 basket that was in the red. What's leading to this price pressure? Because the stock clearly has been an outperformer in that private banking space, where a lot of these stocks have given somewhere between minus 5% to 15% returns. IndusInd Bank over the last 1 year has given returns of about 30-35%.
Yeah, absolutely, Suyash. On the face of the numbers, there is not much of a negativity as I see, but if you see the opening reaction, as the data read yesterday, 1600 in options was a very good support base, which the put writers had defined. Since the opening trades now post the results, the reaction is that the put writers are shying away or exiting the writing bets. That's not a good sign as far as day trading goes. Call writers are slowly piling up at the levels of 1600 in the writing space. So yes, I believe some pain might be on. The market is not giving a thumbs up reaction to IndusInd Bank results. The support which possibly as a trader you want to see now is the moving average support. 50-day moving average roughly works out to 1550, 1550. That's the day trading support which this bank might head to. So stay away from buying right now. Let the prices at least stabilize above 1600. That's the first sense which I derive. That would be the first hint that there can be some buying recovery in IndusInd Bank.
Good morning, Akshay. I'll drive your attention to an industry where analysts are expecting more than double the profits in the Q3 results, and that's the tire industry, and specifically MRF, which breached the 1.5 lakh per share mark just few days ago. It's hovering around 1,38,000 right now. Compared, and in the last 1 year, MRF has grown 54%. Its peers, CET, has grown 57% in the last 1 year. Balakrishna Industries, of course, only 17%. How does one approach MRF, or should the new investors go for lesser price stocks like Balakrishna Industries and CET, which are 2,500 abouts? Or it is still good to go into MRF, which is at 1,39,000 around right now?
Good morning, Amit. Well, if you look at MRF, yes, a very high priced, counter in terms of the value it holds. So really, the retail investors do not get comfort looking at the prices itself. But if you look at the broader chart structure, the structure is very strong. In fact, the entire structure has been buzzing. You name it, Apollo Tires, JK Tire, all these stocks from the tire space have been buzzing in the last few trading sessions, irrespective of what is happening in the indices. Here, MRF Tires has seen a very strong volume action a couple of days back. This was around 1,35,000 price level. So that's the price point where I believe there was an actionable. Chart structure is still strong, highly overbought. So not a suitable buy point if you are trading the stock. I would say that if you are holding on to it, yes, there is no reason why you need to fear. The overbought is just a matter of time for short term. I believe the targets of 1,50,000, which was the spike which we saw a couple of days back, that might be the target area you want to relook at. Support area is 1,32,250. So keep a trailing stop loss now. If you have MRF with you, if it is there in your portfolio, there is no still reversal signs. If as a new investor you are searching for tire stocks, then I believe JK Tire is the better bet here, considering the fact that, although this too stock is at its lifetime high level, the promise or the potential of the stock ballooning or giving you significant returns as an investment holds more promise over MRF. That's what the charts have to say.
Okay, Akshay, apart from this, what do you suggest or advise for our investors today?
Well, I have a couple of trade recommendations. The markets have been on a slippery footing in the last trading sessions, and clearly one sector which has come out in all this mayhem is the pharma space. The buying again momentum is slowly gathering up in most of the pharma and the healthcare names. So here I have a couple of pharma names which I would recommend to the viewers. One would be Lupin and the other would be Cipla. So Cipla, a very strong breakout which has been noted on the charts a few trading sessions back. Supports revisited, again fresh momentum entering into the counter. This can easily target around 1362 on the upside. 1379 can be your extended targets. Keep a stop loss of 1297. Lupin is one more stock you can consider here. Again, a very strong chart structure. Yesterday we did see a breakout. Today the momentum is somewhere missing, but I believe it will catch up. So short term, keep a target of 1467, stop loss 1397. And Tata Motors, a bit of a flavor which is different from pharma, but from the auto space, which yesterday obviously did see some momentum pick up. A very strong chart structure. Nothing to do with what the indices are doing, because the Nifty corrected, but Tata Motors somewhere held its ground, was not disturbed at all in what was happening in the market. I believe still there is more momentum to go right up till around 862 to 872 on the upside as a trading bet. Keep a stop loss of 797 as a risk management in this trade.
All right, those are the stock recommendations from Akshay Bhagwat. Lupin, Cipla look attractive from the pharma space, and Tata Motors is another bet that you can take for the short term. Sir, always a pleasure speaking to you. Thank you for joining us here on News 9.